Hey everyone, welcome to our second slide for patterns, right? So right now we are studying patterns that are formed by triangles. So these are chart patterns, right? We are saying they involves price moving into a tighter and tighter range as time goes by, right? And provides these patterns, they provides a visual display of battle between bulls and bears. So we are saying there's a battle between bulls and bears, right? So we're saying this price, they are moving into a tighter range, right? So these prices were moving like this. So here maybe there is a resistance where sellers are pushing. When this price comes here, these sellers, they are pushing the price back, and also maybe buyers here, it bouncing here where there is high demand, then it goes here. So that's what we are saying, a chart pattern for triangles. One disclaimer, this is one of my favorite strategy that I always use at UNICOASTER Trading Group. So I highly encourage everyone to listen and pay attention here. So these are usually continuation patterns, right? So let's say these patterns usually, if it is formed, right, these triangles, if they are formed in an uptrend, most of the time these patterns, they show that an explosion will be in a continuation in an uptrend, right? Most of the time, right? So what are types of these patterns? We have types of patterns, right, that we have. So the first one is symmetrical triangles. We know what is a symmetry. A symmetrical triangle is a symmetrical triangle. It's like this, right? Ascending triangles, it's like this. Descending triangle, opposite of this. But the main idea, guys, here is not about knowing these shapes or what, is to know the technique so that you take advantage of the market and be a profitable trader, right? So let's take a look at symmetrical triangle, right? You can see this is a symmetrical triangle. So we are saying these prices, they are bouncing here. Buyers, these sellers, they are saying no, this price can, but as you can see, they are becoming these prices are becoming tighter and tighter, are going in a tighter range, right? So the question is, what will happen? We say these chart patterns, they detect an explosive move or a momentum move of prices. So the prices will either go this direction, a rapid move. That's the end result, right? So we need to take advantage of this and catch these big moves, right? So it means that neither the buyers, right, this here we have buyers, right, no, the sellers are pushing the price far enough to make a clear trend, right? So end result, there will be a clear trend. So we always say place an entry orders above here and here, because we are saying you don't know where this explosive will go. So place an order here, this side and this side, right? So if first this entry order is heated, right, the price starts to go in this direction, you end up canceling your order, right? Your order this side. If it is this you cancel, you will not get charged for commission or so forth. So just place two orders this direction. That's the most important technique, that in just above, please, right? So place in both sides. If it is this side, it's fine. If it's this side, you end up canceling this, so there's nothing to lose, right? So it's very important for us to know. So this is what we call a 3/4 cut technique. I will explain, please pay attentive. What do I mean by a 3/4 technique? I will explain. This is what we call a three-quarter technique. I will use what we call a three-quarter technique. So for now, wait, I will show you. So we are saying place your entry order this side, right, and this side. But the question is, where is this is your entry, where you place your order, your entry point, right? Here you place your entry, another one entry here, right? But the question is, where are you getting your, boys, you need to know your entry point and also your exit point. Where are you getting out of the position? You can see that they are saying the end, you should exit at the height of this, but this is a concept from book. Books concept don't work in real markets. So what is our technique? That's the technique that I was explaining there. I said three-quarter. So you measure a triangle. Let's say this triangle is like this, right? So from here to here, three-quarter distance of this distance is from here, right? So instead of taking this length to say you exited this length, right, you take it your three-quarter here. So maybe it will be somewhere here. You should get out, not here, please be careful, because this will end up maybe coming here, and what, place your exit here. I'll write exit. That's what we call everything that I will do here with any triangle. Remember that I will use a three-quarter cut. So put your exit point, point here and here. It should be the same three-quarter of this length, not this one. I said this. Okay, so that's the same thing here. Let's talk about ascending orders. So ascending orders, so let me just read for this. It means what I have explained. So if you had placed another entry order below the slope of the higher lows, then you would cancel it. That's the same concept, right? So ascending orders, we are saying buyers, these people who are here, are starting to gain strength. They are pushing this price up and up, right? Because they are making higher lows, right? You should not be obsessed in which direction. So don't worry about, should I place this? Because most of the time, traders, if it's like in ascending order, it will explode in this direction, because we believe this is a continuation pattern. As I explained here, these are continuation pattern, but we don't know. You don't want to lose good opportunities, right? So place your entry order here, just above this slope, your entry order. I will show you with an example, so don't worry. For now, just know that we'll place our entry order there above and below, right? Where is your exit point? Where do you end? Three-quarter, you measure this distance from here to here of this triangle. The three-quarter is somewhere maybe here. You take this distance. That's the same distance that you put for your exit. Please listen very careful. Your exit. So that's the same thing here. You put also an exit, right? So let's take for example. So here it's a chart that I have already drawn, right? So you can see these prices, they were bouncing this support, bouncing this support, but at the end of the day, you can see this price, they end up forming what we call, what is it, a triangle, right? You don't need to understand, is it a ascending, descending? If you see a triangle, don't worry about its name. We are here to make money in the markets, right? So you can see it was bouncing, bouncing, bouncing. So let's say, where is your entry point? So your entry point should be here, another one here, right? So where is your exit point? Your entry point should be here. Your entry point should be here. Another one should be above, just above. Right, your end point should be here. So where is your exit point? You measure the distance from here. The triangle is ending here, so your 3/4 is somewhere here. That's the length for an exit. So you come and measure, you exit your position here at $1 $1.43291. If it hits this point first, you end up canceling this order. If it hits, right, so another one example is this. So you can see your exit, you put your exit here, it's still moving, so it will be fine. Another example is this. You see, I managed to draw this. You just come here, take your trend line, this trend line, you draw. There was a triangle that I saw, so that I don't waste time. So the question is, you ask yourself, where is the 3/4 mark? 3/4 mark is from here to here. So I took this, I took this, took this. So where is your entry? You place at the same time entry points here. You place another one. So don't worry, I will explain with an example. You place another one here. You can see at the end of the day, these prices were moving in a tighter, but it ended up exploding, which means this entry will be hitted, right? Then there was a major explosive move. So you were exiting here, which means it was a good trade. This one will end up canceling it, right? Just above, please. Not just above. So yeah, so there's one thing that I didn't mention, please, before so I need you to check something. I said the 3/4, right? You don't need to wait for these prices to go in a tighter range here. So you measure also from here to here at a 3/4 mark. That's where you place your entry. A very important concept. At a 3/4 mark from here to here, that's where you start to place your order. You don't need to wait prices to come here, because it won't most of the time in real markets. Like here, let me show you. You don't need to wait for these prices to move like this to this. You will lose trades. So at a 3/4 mark from here to here, you place your entry points here. Your entry points here. You don't need to wait up until it goes here. At a 3/4 from here to here. Another one, let me show you this concept. What I'm saying is, you can see it broke a support at a 3/4. If you measure from here to here, let me take from here going up at a 3/4 mark. That's where you start to say, no, let me prepare to get in a position. You place your, because these prices are moving, so if it moves in a distance of 3/4, that's where you start to place your entry points. I think everyone has understood this concept. Let's move to our next slide.